Good morning. It's Wednesday, February 12th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. Let's get you ready for the futures and commodity trading day ahead and looking at the precious metals overnight. The futures, they are lower. This comes after yesterday we identified a potential bearish technical setup, not fundamental. The fundamentals are quite firm here in the market, but technical in the charts where we looked at an inverted hammer pattern. So if you look at the overnight price action, we're down about $25.70 on the April gold contract. The high was 29.2790. The low was 29.0410. Now, what's important about that is that we did not achieve new all-time highs. We've actually got a lower low and a lower high on the chart here. What that tells you is this market is most likely kind of rounding out and going into a consolidation phase. Your first levels of support are going to be about 28.9390, and then below that's going to be about 28.78. So look at, it's going to be about the February 10th low is where you're going to want to look at that next level of support. So it's 28.7990, and that was a day where we shot up about $46. So we're starting to retrace that. You shift over to silver. Silver futures right now are about 32.14 and a half, down about 17-18 cents. The high was 32.41 and a half. The low was 32.09. So it's down about 0.5%. What that's telling me is it's consolidating in nature. And if you look at the gold silver ratio, pushing back up over 90, so about 90 and a half to 1 on that gold silver ratio. You look at copper futures, they are snapping back just a bit, up about 1 cent after that big sell-off we saw yesterday. Aluminum down about 1% here. Platinum futures unchanged. Palladium just slightly lower here, and it looks like kind of a mixed sea of red and green here on the screen across the board in a lot of different markets. So if you look at the futures, there's a couple things that we're going to want to look at here today. It's going to be the futures, they are down slightly ahead of the CPI. The consensus forecast is looking for a monthly headline inflation to edge down 0.4% in December to 0.3% in January. But the core is expected to edge up to 0.3%. That's the fifth time in 6 months. So the expectations for the rate cuts, they are really a key here that we're going to watch. This comes after Jerome Powell. He indicated and reiterated that the Federal Reserve isn't any kind of rush to change policy. So he said, with our policy stance now significantly less restrictive than it has been before and the economy remains strong, we do not see a need to be in a hurry to adjust his policy stance. He said that at the Senate Banking Committee here on Tuesday. The markets are highly sensitive to this inflation print. Even a little bit of variations here could really send some volatility in the markets as investors are already on edge here with a lot of the tariff talk, the interest rates, the tech valuations. So we should see some volatility coming around that when that number comes out. So that's going to be 7:30 a.m. Central Time. That's one of the main things I'm watching, and there's a couple key things. You want to look at the technicals on the chart here, especially with these metals markets, because if you haven't been involved, you're probably going to get some opportunities here with some volatility coming into the market. Then secondly, you look at that inflation reading that's coming out. And then third, you're going to look at 9 a.m. Central Time. You're going to get Chairman Powell. He's going to come out here with his testimony. And some of the things he's saying, it's been less sensitive to the market, but it should cause some volatility. And then it also could lift that market back up here. Now, taking a quick look at the oil market, down about 1%, 72.50 last on the March contract. Many people are playing the April contract. We did see an increase in those stockpiles in crude oil with the API data coming out at 9 million barrels last week, and this would be the largest inventory build here that we've seen so far. So the oil market has really had kind of a bumpy start this year. Some of the gains were caused because of the weather. Others were caused by sanctions. But then we saw Trump's tariffs. He lifted those against Canada, and that's where futures kind of came back down. If he starts to put those back on, you're going to see oil futures push up, and then also Middle East tensions rising. So today, it's going to be a few things you really want to watch. You want to watch day 2 of Fed Chairman's testimony, Chairman Powell's testimony. You want to watch that inflation data, and then you want to watch crude oil inventories. I think that those things are really going to be kind of the market movers and the drivers of the market here today. So again, Again, if you never traded futures before, to help you gain exposure to the gold market, they did announce a 1-ounce gold futures contract. It kind of gives you that pocket-sized approach here and just kind of a test to get into the markets here. And it's just 1 ounce, so every dollar move that you see gold move, your account's going to move $1 as well. So you can learn more about it by registering for a guide and additional information in that link below. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.